Hello everyone, welcome to my channel HD Orion. We are studying accountancy for class 12th from T.S. Kirival's textbook 2023 edition, Accounting for Partnership Firms. Chapter 1, Accounting for Partnership Firms Fundamentals. And in this video we will study Guarantee of Minimum Profit to a Partner. So let us see some questions from the textbook. So in this topic of guarantee of minimum profit to a partner, a firm guarantees a minimum profit to the partner, right? And before distributing the net profit to the partners, we have to assure that the guaranteed partner is receiving the share of guaranteed amount or not. So that is the thing which we have to understand in this particular section. So let us read the question and try to understand that what this guarantee of minimum profit to a partner mean. So question number 79, Mohit and Shobhit are partners sharing profits in the ratio of 3:2. Rohit was admitted for 1/6 share of profit with a minimum guaranteed profit of rupees 10,000. At the close of the first financial year, the firm earned a profit of rupees 54,000. Find the share of profit which Mohit, Shobhit and Rohit will get. Now, in this question, there is a guarantee of rupees 10,000 to a partner called Rohit. Fine. So, Rohit's portion of profit is 1/6 share. Out of total profit, he will get 1/6 share or rupees 10,000, whichever is more. Fine. So, that is the minimum profit he should get is 10,000. So, this is where the guarantee is. So, guarantee is given by the firm only to one of the partner. Fine. So first we have to see whether at least the guaranteed amount is received by the partner or not. Fine. And then the rest of the profits will be distributed to the remaining partners. Let us see how. Solution 79, Mohit and Shobhit. And their profit sharing ratio is 3:2. And there is a new partner called Rohit, and his portion of profit is 1/6 from the total profit. And net profit for the year is also given. Net profit for the year is given rupees 54,000. And guaranteed amount of Rohit is how much? 10,000. Guaranteed amount means minimum amount he should get in a year is rupees 10,000. Fine. And here profit is 54,000. So Rohit's portion will be how much? 54,000 into 1/6. Fine. We are checking whether he is getting the minimum amount or not. So when we check this, it is rupees 9,000. It means Rohit is not getting the guaranteed amount. This is the guaranteed amount and he is not getting guaranteed amount which is less than an amount which is less than the guaranteed amount. So what will we do? We will first give Rohit rupees 10,000. Fine. And then the remaining profit will be given to remaining partners, that is Mohit and Shobhit, in their profit sharing ratio. Is it okay? So, how much will Mohit get? Mohit will get, see, 54,000 is the total profit, out of which 10,000 is given to Rohit. And now, this is 44,000. It will be distributed in the ratio 3/5 to Mohit. Rupees 26,400. Similarly, Shobhit. 54,000 minus 10,000, that is the guaranteed amount, multiplied by 2/5. And the amount is rupees 17,600. And finally, Rohit is rupees 9,000 plus 1,000 is equal to rupees 10,000. So this is the guaranteed amount. and this 1000 deficit is borne by Mohit and Shobhit. Fine. And in which ratio it has been borne? It has been borne by them in the ratio 3:2. Fine. If you observe it minutely, you will find that both the partners have shared this deficit amount in their profit sharing ratio only. Now let us see question number 80. A, B and C were in partnership sharing profits and losses in the ratio of 4:2:1. It was provided that C's share in profit for a year would not be less than rupees 75,000. So here there is a guarantee to partner C, an amount of rupees 75,000. Profit for the year ended 31st March 2023 is rupees 3,15,000. You are required to show the appropriation among the partners. Profit and loss appropriation account is not required. So we just have to show mathematical calculation that how this net profit will be given to the partners, taking into consideration the guaranteed amount to partner C. So solution 80. There are three partners A, B and C, and their profit sharing ratio is 4:2:1. C is guaranteed an amount of rupees 75,000 per annum. Fine. And net profit or divisible profit, you can say, net profit or divisible profit is rupees 3,15,000. And we have to see whether C is getting the desired or the guaranteed amount or not. First we will check this. So C is getting how much? 3,15,000 1 by 4, 5, 6, 7. 1 by 7. Now the amount is rupees 45,000, which is less than the guaranteed amount. So what will we do? We will first give 75,000 to C. So after giving 75,000 to C, the remaining profit is 3,15,000 minus guaranteed amount 75,000. The amount is rupees 2,40,000, and this 2,40,000 will be given to A and B in their profit sharing ratio. What is the profit sharing ratio? 4:2. 4:2. You can also say 2:1. Fine. So in this way it will be granted to the remaining partner. So how much will A get? A will get out of 2,40,000. You can reduce it to 2:1. It is 2 by 3. And B will get out of rupees 2,40,000 1 by 3. So here it is 80,000 rupees for B. Here it is 1,60,000. And for C, we already know that the guaranteed amount he is receiving, it is 75,000. So in this way, the profit will be distributed to the partners. Now let us see question number 81. X, Y and Z entered into partnership on 1st October 2022 to share profits in the ratio of 4:3:3. Now here the accounting year the business is starting from 1st of October 2022. It means 6 months later. 6 months later. X personally guaranteed that Z's share of profit after allowing interest on capital at the rate of 10% per annum would not be less than rupees 80,000 in a year. Now here there is a guarantee given by partner X to partner Z. X has guaranteed that after interest on capital, Z will be given a profit of rupees 80,000 a year. Capital contributions were rupees 3 lakhs for X, rupees 2 lakhs for Y and rupees 1,50,000 for Z. Profit for the year ended 31st March 2023 was rupees 1,60,000. Prepare profit and loss appropriation account. So for the year 2023 and 31st March 2023, we have to prepare profit and loss appropriation account and show interest on capital also. At the same time, we have to distribute the divisible profit to the partners, keeping in mind the guaranteed amount which X has guaranteed to Z. Let us see the solution. So solution 81, by net profit. Net profit for the year, but it is only for 6 months. Why? Because the business has started on 1st of October. So from 1st of October to 31st of March, it is 6 months. And 6 months net profit is rupees 1,60,000. And we have to appropriate as per the partnership deed. So interest on capital. Interest on capital will also be paid for 6 months to partners X, Y and Z for 6 months, and X capital is rupees 3 lakh. 3 lakhs 10% is 30,000, half of which is 15,000. Only for 6 months we are taking. And 2 lakhs 10% is 20,000, and for 6 months it will be rupees 10,000. And Z's capital is rupees 1,50,000, 10% of which is 15,000, half of which is 7,500. Now add this, it is 32,500. Now out of net profit 1,60,000, 32,500 in the form of interest on capital, and then the profit, divisible profit. Divisible profit will be given to the partners in their profit sharing ratio, which is 4:3:3 to partner X, Y and Z. Let us see how much they get. Now 1,60,000 minus 32,500 is 1,27,500. So this 1,27,500 has to be distributed to the partners in their profit sharing ratio. So when we divide here, we get 51,000 for partner X and 38,200 for 250 for partner Y, and again 38,250 for partner Z. But there is a guarantee. Find a guaranteed amount of rupees 80,000 per year. 80,000 rupees per annum. For 6 months it will be how much? Half of this, that is equal to 40,000. So Z should get 40,000, which he is not getting. And who has guaranteed this amount to Z? It is X. So from X we will deduct some amount and we will add to Z, so that his guaranteed amount is fulfilled. How much we should add here? In order to make 38,250 rupees 40,000, 1,750 is to be subtracted from X and added to Z. In this way, Z will get rupees 40,000 and X will get rupees 49,250, and Y will receive the same amount, because guarantee has been given by X, and therefore the entire deficiency to Z will be borne by X. So this way the partner's profit will be given. Now question number 82. A, B and C are partners sharing profits in the ratio of 5:4:1. C is given guaranteed that his minimum share of profit in any year would be at least rupees 50,000. Deficiency, if any, would be borne by A and B equally. Profit for the year ended 31st March 2023 was rupees 4 lakh. Pass necessary journal entries in the books of the firm. So let us see how this question is to be solved. So profit and loss appropriation account debited. Profit and loss appropriation account debited. What is the net profit for the year? It is 4 lakh, and it will be given to the partners in their profit sharing ratio. So to A's capital account, to B's capital account, and to C's capital account. And in their profit sharing ratio, which is 5:4:1. So when we break 4 lakh in this ratio, it is 2 lakh rupees for the first partner, 1,60,000 for the second partner, and rupees 40,000 for the third partner, being profit to partners. Now see, as per the terms, C was guaranteed an amount of rupees 50,000, which is not fulfilled. Means C is getting only rupees 40,000. There is a deficiency of rupees 10,000 here. Now we have to bear this 10,000. A and B will bear it equally, as the question suggests. And this will be borne by them equally. So we will debit A's capital account. We are taking out money from A and B to pay C. So what is the deficiency? 50,000 minus 40,000 is the deficiency. That is rupees 10,000, and it will be borne by A and B in their, not in their profit sharing ratio, equally, because the question says that they will bear this equally. So 10,000, half of which will be borne by A and the other half by B. So this is the solution. Now let us see question number 83. Atul, Bipul and Charu are partners sharing profits equally. Bipul is guaranteed minimum profit of rupees 2 lakh per annum. Salary is payable to Bipul of rupees 10,000 per month. Net profit for the year ended 31st March 2023 is rupees 6,60,000. Prepare profit and loss appropriation account for the year. Let us see the solution for this. So solution 83 we will see. Profit and loss appropriation account for the year ended 31st March 2023. By net profit for the year is rupees 6,60,000. And out of this 6,60,000, Bipul is to be paid salary. Bipul's salary, which is 10,000 rupees per month. So 10,000 multiplied by 12 is rupees 1,20,000. And now the remaining profit will be given to the partners. So to profit. So what is the remaining profit? It is 5,40,000 is the remaining profit. Now here is a condition to Atul, Bipul and Charu. Bipul has been guaranteed. Fine. Bipul is guaranteed an amount of rupees 2 lakh. So we will see whether Bipul is getting 2 lakh or not. Let us calculate it here. Bipul is getting out of 5,40,000, because the profit sharing ratio is 1:1:1 and into 1 by 3, we get rupees 1,80,000. So all the partners will get rupees 1,80,000. But Bipul is guaranteed an amount of rupees 2 lakh. So what will we do? We will give 2 lakh rupees to Bipul first. Fine. Out of 5,40,000, 2 lakh rupees is given to Bipul. So remaining 3 lakh, remaining is how much? 3,40,000. This 3,40,000 will be given to Atul and Charu. Atul and Charu in their profit sharing ratio, which is 1:1. So when we break it in 1:1, they get rupees 1,70,000 each. Fine. when 3,40,000 is broken in the ratio 1:1, which is the profit sharing ratio of Atul and Charu, both will get rupees 1,70,000. So that is the solution. Actually, they are bearing the deficiency of Bipul rupees 20,000 equally, not equally in their profit sharing ratio. Here the profit sharing ratio is 1:1, therefore the deficiency is borne by them in the ratio 1:1, which is equally. That's the answer. Now let us see question number 84. Parul, Prerna and Kushal are partners sharing profits equally. Parul is guaranteed minimum annual profit of rupees 2 lakh. Kushal is to get commission at the rate of 5% of net sales, and the commission is determined at rupees 50,000. Net profit for the year ended 31st March 2023 is rupees 2,50,000. Prepare profit and loss appropriation account for the year. Let us see the explanation of it in the solution. So profit and loss appropriation account, and by net profit. Net profit is rupees 2,50,000. Now the question says that Kushal is to get a commission of rupees 50,000. So to Kushal, commission rupees 50,000, which is actually 5% of net sales. Fine, the amount has been already calculated and given in the question, so we just have to put it here. Now the divisible profit. Their profit sharing ratio is equally. And what is the divisible profit now? Divisible profit is rupees 2 lakh. To the partners Parul, Prerna and Kushal. And here a guarantee is given to Parul, that Parul will get yearly income of rupees 2 lakh, and there is only 2 lakh rupees divisible profit. So entire 2 lakh rupees will be paid to Parul. And Prerna and Kushal will not get anything in the divisible profit. So entire divisible profit goes to the guaranteed partner Parul, and the rest of the partners are not receiving any amount from it. So this is the solution. 2,50,000, 2,50,000. I hope that you have got the concept very well and you have watched the full video in detail. In case you are having any doubt, then please put it in the comment section. Do like, subscribe and share this channel. Thank you so much for watching this video.